Well, it's been a great quarter once again from Indian Hotels. So let me welcome on board the MD and CEO, Puneet Chhatwal, and talk about exactly what went by in the quarter. Puneet, once again, a great quarter. And, everyone was like, despite all the flight disruptions, geopolitical tensions, you've managed to post an 11% year-on-year RevPAR growth. Tell me, what's the secret sauce? How resilient is your domestic business?
Well, Aisha, firstly, it's always nice to have a conversation with ET now after our results. And there is nothing like a secret sauce out there. It's what we have been communicating, what we have been doing. We have a very strong brand, which is rated as India's strongest brand across sectors. So Taj is still the backbone of the company. It tends to command a premium. So our RevPAR premium to the market that we have achieved is north of 50%. Depending on which markets we look at. In many markets, we've completely outperformed. And in many, we have also suffered because when 33 airports shut down during Operation Sindoor, and you have a Taj in Jaisalmer and a Taj in Jodhpur and a Taj in Amritsar and in Srinagar. So I think we had our share of challenges. But generally, a strong brand and a strong promise helps you sail through. Our efforts on asset management are paying off well. Our renovations are paying off well, helping us drive premium and our new businesses. Our new businesses growth, as you might have seen, is at 27%. Our guidance has been around 35, and I think we'll achieve 35 for the year. And a very high margin on these new businesses.
The aberrations that you just talked about because of Operation Sindoor, well behind us now?
Yes, I think, when Operation Sindoor ended, then suddenly there was the Iran and Israel conflict. It does have an impact on the foreign tourists of business people from outside of India coming in. There is a sudden drop. Then the air disruptions because of the unfortunate accident. But generally speaking, everything is behind us, and our guidance stands at a double-digit growth on a very high base that we have for the year. And that is definitely driven 70% by the market and 30% by strong openings that will follow for us as of the month of September till March. We expect to open at least 20 to 25 hotels in this period for the total of 30 to 36 for the full year.
Sure. I was just looking at your EBITDA margins, and they clearly remain steady despite a change in your payroll cycle. Tell me, what cost control or productivity initiatives are you prioritizing right now in order to maintain or even expand margins going forward?
Well, Aisha, I think what we have consistently communicated, it is finding the right balance or the sweet spot between capital heavy and capital light, between growth in brands like Taj and brands like Ginger, having the right formula for growth in our private membership club, the Chambers, and new destinations for the Chambers, like we'll be opening one now in Frankfurt. We're doubling the size in both Taj Mahal Palace in Colaba, which is under renovation, and so is it happening also in London. So increasing capacity of high margin businesses like private membership club, increasing the speed of growth in businesses like Ginger, which are also high margin businesses, and smart renovations of assets like we have done at the Taj Mahal Hotel, popularly known as Taj Mansingh in Delhi. This is a combination which creates the high margin versus what we used to do 8-10 years ago. And that is not changing because the quality of our pipeline of projects, both for renovation as well as new construction and the fee-based growth, is very, very robust.
So you've reaffirmed a double-digit revenue growth for FY26. Is there any key geography or brand, Taj, Ginger, or SeleQtions that you're going to be particularly focusing in on, or that will drive this growth?
What has very worked very well for us in this quarter is the growth going back to a very normal level, not a high level, is San Francisco. The Taj in San Francisco. The pier has done very well for us in Q1 and is showing good trend in Q2 also. But very important is London is coming back strongly. And London was very sluggish for a couple of years because of the elections and all the other things that were happening there. And so was San Francisco. So these are our company-owned assets, and we expect them to do very well in the remaining 9 months of this financial year and going forward also. And Cape Town has shown a great turnaround in the last few years. And that's how things are working on the international front. And on the domestic front, obviously, Delhi, Mumbai, Rajasthan, Goa, Bangalore, they continue to perform well. And I see no reason why they would not be doing as well as they've done in the past in the remainder of the year or in the years going forward.
Since you did touch upon London, I want to talk about that in greater detail, because what I understand is that you're investing a sizable £22 million in London alone this year. How are the international markets, both UK and US, which you just flagged off, contributing to your overall EBITDA? If you could just give me, some color on that. And how do we see their margin profiles evolving going forward?
US, it's not a secret that San Francisco was fine till the city took a dip because of, reasons beyond anybody's control in any sector. But now it's coming back to where it used to be, and maybe it'll take another 12 to 15 months. London has been always a strong performer for us and a very strong contributor. I was there for a day and a half privately this month. And I have to say that this month, London is like doing so well. It is so buzzing. The whole hotel, the property during Wimbledon, during cricket, we had the men's cricket team there, with the women's cricket team, we had all the Wimbledon celebrations out there. So a lot is happening in London the way it always used to be. And it's the most important lodging market in the world besides New York and Paris. And investing in that asset obviously helps us to become a very strong brand. That's an icon for us. And it has always contributed well. And we expect that it will continue to contribute even more than it has ever done in the past, both on a percentage basis as well as in absolute terms.
Oh, yeah, absolutely. Nothing beats the UK summer, does it? But, I wanted to talk about this 392 hotels and the fact that you're planning to add 504 owned rooms across 4 properties in FY26. Tell me, what's your roadmap to achieve the 700 hotel milestone by 2030 that you've talked about? And will growth continue to be largely asset-light for you?
Yes, absolutely, Aisha. Our guidance 2030 under Accelerate 2030 is 700 hotels, a portfolio of which at least 500 will be in operations. Our growth brands will be Ginger, Gateway, Tree of Life, and other new businesses, which will significantly contribute in number of rooms and number of dots on the map. We will keep the purity of Taj obviously, as absolute priority, and a selective growth of Taj in select international markets. The owned hotels that we are talking about are 2 in Iktanagar, a Vivanta, and a Ginger, which are slated to open in September and October, respectively, followed by the Taj in Frankfurt by end of January, which means in this financial year, but at the beginning of Q4. So nothing is changing on that front. We had a great year last year in terms of growth. We had 74 signings and 26 openings. We expect to sign at least a hotel a week in this year too, and open around 30 to 36 properties, as I had mentioned earlier. And that will be the trend going forward, 30, 35, 40, or even 50 hotels per year. to open because our pipeline is so strong. We're already at 140 plus hotels in our pipeline.
I want to talk about Taj Sats as well, because that's seen a solid growth of 21% on an annual basis. And you've guided for a 20% growth now for the full year as well. Tell me, how central is the airline catering business to IHCL's diversification strategy? And are there plans to scale it up internationally also?
At the moment, our focus remains India only. We might, get opportunistic if something comes along our way in, let's say, Sri Lanka or Maldives, etc., because it makes sense for us to do it than for SATS to do it from Singapore. That's one. The second is the Taj Sats is also diversifying into non-aviation business, into institutional catering very strongly. We expect that segment to get to 20% of the total revenue of Taj Sats over the next 3 years. And very important, we should not forget, India has ordered more than 1,000 planes amongst various airlines. And as they come in, the needs and wants of the flight kitchen business is expected to grow. And we being the largest, having more than 50% share of all meals served in the sky, we think Taj Sats is very well positioned to take advantage of that.
Spiritual true tourism and how it's really been growing in the coming years, and it's been a great growth driver for you as well. Are you developing any new products, locations or experiences to further tap into this emerging segment?
Well, anything. We are in a B2C business, and the needs and wants and preferences of customers are always changing and evolving. That's why it is also called, in many ways, a capital-intensive and a labor-intensive business. And we being the largest hospitality ecosystem from India, we have to be at the forefront of any new innovations that come in. And over the last few years, Aisha, as you're aware, and also one of our big customers, homestay came out of nowhere. Today, we have a portfolio of 300 homestays, of almost 140 in operation from that, and another 160 to open in the next few years. Home delivery with cumin to cuminization of ginger. So all these are new concepts, including Tree of Life. I don't know if anybody would have thought 5 years ago that we would be having these brands in our portfolio. So I think continuous evolution is just a part of the journey. And we being at the forefront of the hospitality sector, it is our responsibility to take this always to the next level.
So what's the final message to your long-term shareholders? What is it that they should be expecting? Do you think your stock is fairly priced right now or still undervalued?
That I am not qualified to comment on, but what I can definitely say that Taj will continue to be the crown jewel, not just of Indian hotels, but the crown jewel of India. We will do whatever it takes to secure the next 100 years of Taj, and we will put enough power behind our new businesses and scale them up as fast as possible so that they are all standing on their own feet and are recognizable business units in themselves, contributing well to both the top line as well as EBITDA and the net profitability of the company.